Oh my god! Oh my god! Oh my god! Okay, welcome everybody. And when I say welcome everybody, I mean just um, me, because there's nobody watching these live streams for now. I will build a system that automates all of this, so that I can just stream, and like the clips go out by themselves. So be ready for that. I'll have this system ready and going soon enough, so that the next lives that I do, gain somewhat traction. I think that social media for the West has had a similar road to social credit in China, simply because society just basically runs off of social media nowadays, and it's increasingly getting more and more um, integrated in society as a whole. Now AI poses a threat of some sort to it, but I think that it's a net positive because it generally tends to increase the quality that we have of content on social media, so that if the average was here before, now with AI, like anybody can make this kind of content. And so this is the new average. The average has been moved up. And so you need to actually say something useful, meaningful, interesting to actually stand out on social media. So the days of stupid people doing stupid things are probably gone. Um if something has success on social media nowadays, it's because it's a good thing. So yeah, social media nowadays is a pretty accurate representation of how you stand in society. It's a pretty good indicator of how society views you and how valuable you are to society, which is kind of dystopian if I'm being honest. It's a very weird thing. I didn't imagine I would say something like that, but that's the kind of world we live in. So you either do something about it, or you don't do anything about it, and the world goes on regardless. Anyway, we're building a trading bot. Yesterday I tried building a uh, a system that would actually try to, predict buying signals. The point is, I failed miserably because, well, the machine learning algorithm that came out of this simply didn't learn anything, and so it never predicted any buy. It only predicted don't buy. So according to this algorithm, you never go in. You never buy. So I think that it's safe to say that there's a bunch of things that need to be taken into account. First of all, stock price data is non-stationary. So that means that it's not like seasons. For example, like we can predict the weather knowing the seasons, and it's generally going to be kind of accurate. Oh wow, I think my camera is. I don't know if it's dirty or what. Is it broken? Oh my fucking god. Oh no, it's not broken. It's just a like weird spot. I don't know what that is. Anyway, what I was saying is, actually, I'll just show you something non-stationary data. What you can see over here is this is stationary because it tends to follow cyclically the same sort of routines. It has a seasonality to it, whereas non-stationarity means that 2020 may move in a different way from 2019 or 17 and so on. So it's kind of unreliable if you want to do this. Also, another thing that I did that I'm not fully sure is right is I tried to predict by the end of like the following week. I think that if we were to analyze the next 3 months instead, that would be so much more easy. And maybe like we can add a more significant like so I think that what I need to really be doing is making a function that creates target values so that I'm so that it's easier to just create different target values and just try them out. There is no like accurate science. It's all about trial and error. So that's what we'll need to do right now. Anyway, what we need to do is yesterday I was playing a little bit. I also asked, so another thing to keep in mind, but this probably will come afterwards, is stock brokerages take fees from you. And those are expenses that come with this. So you need to make more in order to cover those costs. So if the model, say, averages a 5% return, what happens with that is that that gets eroded by the model, by the commissions. So you either like, if you want to get 5% returns, you have to account for all of the costs that come with it. And yeah, so that's something. I wonder if there is a like
I think the thing to know is that the days of the fundamental analyst are coming to an end.
This.
And how do we prepare people for that? I think the thing to know is that the days of the fundamental analyst are coming to an end.
Yeah.
And how do we prepare people for that sort of shift? And I think that there's a lot of things we can do to help not sort of let Wall Street destroy everyone. The five Wall Street firms, basically, kill every trader and every investor out there. That's not fun.
Okay.
So, how do we fight back? And I'm on the fundamental side. I worked for a Tiger Cub. I didn't, ever want to do machine learning. I never wanted to do market making. But, I followed quants since I was a kid. as well, and I was always mystified by how these guys could beat our pants off every year. We worked so hard looking at stocks, and they would just trounce us.
Okay.
And I think if you can't beat them, join them. But also, I wouldn't mind helping everyone learn how to do it, and then the playing field will be even again. And if the playing field's even, that helps everyone. So you have an armamentarium of tools, folks. Quants aren't ripping people off. No, I think quants are making trade-offs. So they're making smart trade-offs, probabilistic trade-offs. And I'm going to show you exactly how this works, and I'm going to even make you that you can link with brokerage APIs to do it yourself.
Okay.
The biggest thing that you have to understand about this is that fundamentally quants really do well. Here's an intraday chart of Pfizer. This is a really good chart for a quant.
Why?
Basically they're a market maker, so they're sitting on the bid and the ask, and they're willing to offer you merchandise. It's kind of one way to think about it is inventory and merchandise. Imagine you're a retailer and you're stocking. Let's see, I have this Afrin, and you got 1,000 of these Afrins, right? Now a retailer only sells, but they do have to buy from their supplier, and they have a fixed bid ask, right? They're buying this thing for $2 and selling to you for $3. Well, the market's sort of like that. And to be a market maker, you have to say, I'm willing to buy at, say, 26.40,
Okay.
and I'm willing to sell at 26.42. Now, what's the problem? Well, if you get hit on both sides at once, I think I went through this the other day. If you get hit on both sides at once, 40 times 26.41, you make a cent. It's wonderful. Now, this is a spread that's very tight. You might instead want to do, say, 26.35 and 26.45. Now, the odds that you're going to get hit at the same time on this are pretty low. But let's say you don't need to get hit at it within 1 second. Probability that both of these trades go off in 1 second is not bad. And on 100 shares, you make one single whole dollar. But, on this one, you make $10. Now, $10 doesn't sound too exciting, but it doesn't have to be 100 shares. It could be more, and it could be every stock in the stock market. So if it's an extra, let's make it 1,000 shares, that's $100. And let's say you're doing this on 1,000 stocks, and you're doing that in 5 minutes, and you have enough money for this right now. I mean, that's 1,000 shares is only $26,000. Now, you may not have enough money to do it in 1,000 stocks, but if you do it in 1,000 stocks, that's $100,000 in 5 minutes, and you can linearize that, and you can see in an hour, it's 12 times that, so it's 1.2 million in an hour, and it's about $10 million in a day if you successfully pull this off. Now, I'm not going to give you any illusion that that's necessarily possible, with this amount of capital, but it is possible. It's just a question of how much capital you need. And you will have losses and things like that. So I did talk about this last week. So in essence, as you sell here, where the stock's rising, you are accumulating a short inventory. You might be short $5,000 by the end of this. Now, you might also hedge. You might say, I'll buy SPYs to offset. And as it goes up, you might say, I'm going to lighten my load on how much I'm willing to sell. Instead of 100 by 100, I might say, I'll buy 1,000, because I'm so loaded up on short merchandise. But look, obviously, if the market comes down, you really kill it, because now you cover your short. What quants don't want is charts that sort of look like this. And there's plenty of growth stocks like that, and they're really hard to trade. There's other ways to make money in quants that will offset your losses, but making a market in something that's a straight line up is very tough. You basically will be rolled over and lose money. So if you have more of a chart that's like this is your just money printer. And so you can kind of leverage off of the options market and say, well, what's the implied volatility? The options guys are smart. If there's a lot of vol, maybe it'll be the case where it will be a market like this, or somewhat like that. If it's not a lot of vol, maybe it'll look like this. So that's just sort of one clue.
So high volatility
and again,
is a
we'll
good
talk
thing.
about doing this with multiple securities at once and what kind of things that brings. But I really
So my takeaway until now is that quants really like volatile stocks because they can profit both the way up and the way down, and they don't tend to they're market makers. This is what he said. Anyway, let's keep going.
really don't think it's as hard as people make it out to be. No, No, I mean, I don't look at charts the way, a lot of traders do, which is they try to divine what's going to happen. And, look, Paul Tudor Jones does that. He's one of the best traders of all time. Steve Cohen does that. So it's not like you shouldn't do it or you can't do it. It's not my style. But the quantitative style, I think, is going to make a lot of people a lot of money. It already has made everyone else a lot of money. And for smaller hedge funds that don't necessarily, think they can do it, but I think that they're a lot smarter than they think, and that they could actually run quant books without too much trouble. I think there's this opinion. I was talking to one guy who actually was Citadel's first investor, but some Chicago guys. And I said, you invest in quant? This is 20 years ago. I said, are you in D. Shaw? Are you in this and that? He said, no. He said, I think that space is an oligopoly. It's not understandable to me. The guys that do it well seem to do it well, and they don't tell us how, and that's it. And I think he was wrong, and he missed, if he kept that opinion, I don't know if he did or didn't, but if he kept that opinion, that was the wrong opinion. That opinion became, there became a lot more firms that did that well. So it wasn't Frank. Frank was basically Ken's partner. I put Frank on the inside of Citadel. I'm talking about the first sort of outside investor again. But point being that I don't know how we got off to quant because I want to talk about return on assets. But I think that the general idea of some of these algorithms is simple to understand. Implementing them is not simple. Implementing them really, really well is not simple either. But, some of that should probably be best standards, or like something you can rely on a third party to do. Because ultimately it's plumbing.
Yeah.
Now, choosing which stocks you want to run what algorithms on, that's also a decision you sort of have to make. But I do think you can compete with some of the other quants. A lot of these algorithms are fairly similar. So in any event, that's kind of get at. Again, the story gets deeper and more complicated, but let's focus on PP&E, again, the heart of business.
ਉੱਥੇ ਗਰਮੀ ਹੈ ਨਾ ਬੋਡੀ ਬਿੱਲੇ ਉੱਥੇ ਫੇ ਸਾਰੇ ਆਰਗਨ ਤਾਂ ਉੱਥੇ ਆ ਸਮਝਦਾ ਉਹਨਾਂ ਦਾ
Anyway, I'll just ask Gemini a couple of follow-up questions. What points did the speaker make? What do algos do? Okay, the decline of traditional fundamental analysts. So here is where I sort of disagree with this. Fundamental is basically being absorbed into algo, into quants. At least this is what I believe. Like, it's not like fundamental analysis goes away. It's it becomes a part, a branch of quant trading, because the way you use the data, the way you can like sort of explain what's going on is very is very important. So if you're able to find a way or like if you can find a grande. Anyway, the power of quantitative trading. Success of quants. Believe their methods can be applied and learned. Democratizing quantitative trading. The speaker wants to level. Figa, sto streamando, quindi. Cioè. No, no, adesso basta. Vabbè, puoi passare, puoi passare. Sto coprendo la telecamera, guys. Vabbè, a posto. Market making. Okay, I want to understand what market making is. Okay, providing bid and ask prices. Risk and reward acknowledges that quantitative trading involves risks and potential losses, but emphasizes that it's about making smart probabilistic trade-offs. They highlight the relationship between options, implied volatility, and the type of chart patterns that are beneficial for quantitative trading. The accessibility of quantitative methods believes algorithms are simple to understand and implement more than people think, and smaller hedge funds can adopt these strategies. The change in market. Okay, so I believe, from what I understand, okay, let's just read more before I get into this. Algorithms are used to automatically provide bid and ask prices, facilitating buying and selling of securities. So, what we're buying, what we're trying to predict, is not whether to buy and whether not to buy. What we're trying to predict is entry price and exit price. And from what I took from this, what you have to do is you have to both open a short and a long position so that you can sort of hedge against both. Wow, okay. I think this strategy needs some exploration, but yeah. Anyway, market making algorithms are used to provide bid and ask prices. Okay. Inventory management. They help manage the inventory of shares held by market makers, adjusting positions based on market fluctuations. Algorithms are used to make probabilistic trade-offs, assessing and managing the risk associated with various trading strategies. They can incorporate data from the options market, such as implied volatility, to predict potential price movements. Algorithms execute trades automatically based on predefined rules and parameters. Algorithms can use to hedge positions, such as SPY to offset a short position. Finding and capitalizing on small price differences. They're designed to find and take advantage of very small price differences in the market. And they're programmed to recognize and react to patterns in market behavior. Okay, so I think my main takeaway from all of this is that the way that quants operate generally is, let me just, I was chatting with Grok before the live, and this is the overview that I found. So anyway, market making refers to the strategy of continuously providing liquidity to the market, by quoting bid and ask prices for a financial instrument. The goal is to profit from the bid-ask spread while managing inventory risk. Algorithmic market makers use sophisticated models to optimize their quotes, adjust prices dynamically, and hedge against adverse market movements. Key aspects are providing liquidity. Market makers post buy and sell limit orders, ensuring that other traders can execute their trades efficiently. Um, Bid-ask spread capture. Profits are made by buying at the bid price and selling at the ask price. Earning the spread. Okay. High frequency execution. Algorithms constantly and continuously update orders in milliseconds or microseconds. Okay. Strategies are designed to minimize exposure to inventory risk. Hodling too much of an asset. And adverse price move. Figa, fatto un video. Order book analysis. Algorithms analyze order flow. So yeah, I guess you need the tick data. So that I think that the easiest way to do this is with like assets that are easily traceable. Like the blockchain makes the order book analysis so much easier because you don't have to go through a third party to find out what's going on. That's, I think, the main thing about this. Like, the one of the main reasons liquidity flows into cryptocurrencies so much is because the order book analysis is so much more accessible. And so, since so many more people can do the order book analysis, it sort of levels the field between whales and, just regular players. The point is still that the whales always have the capital advantage. So that's something. Latency sensitivity. Obviously, this thing has to be built in order to just be live all the time. So that's a very important thing. Market impact considerations. Okay. Example in practice. Continuously buy post orders at 50,000 and sell orders at 50,010 cents. If a buyer accepts the ask price, the algorithm immediately adjusts and places a new sell order at a slightly higher price. If market volatility spikes, the spread may widen to 50,000 to 50,050 to account for increased risk. The algorithm might hedge exposure by shorting correlated assets to reduce inventory risk. So you're not profiting off of the stock going up or down. What you're profiting off of is a high frequency short and long position from which you earn the spread. Now, the reason it's difficult for a retail investor to do this, generally, I think, is that you have commissions to pay. And you already pay a spread to the fucking broker that you're using. I think this is like, I prefer pros just because this tends to be over exaggeratedly like compressed. Like, what am I gonna learn from, 15 words, 20 words? Like, do you get what I mean? I wanna know exactly what you're telling me. Anyway, So fundamentally, you're not playing in the market. You're just pretty much on the side, letting everybody fight it out, while you make money off of just providing liquidity, from what I sense. So okay. What? Who's the author of this?
ਆ ਜਿਹੜਾ ਪਾਣੀ
Who's the author of this? So this is exactly on algorithmic trading specifically. So Ernie Chan, I mean, you know, when it comes to Chinese guys, they're the best at this. There's also this guy. Is he any good? I'd say not really. What about Ernie Chan? Is he any good? Would you trust this guy? Anyway, I'd say I'll look into books later. This Chinese guy definitely is interesting. So anyway, what we're market making, particularly in algorithmic trading, is the practice of continuously offering to buy and sell a financial asset to provide liquidity to the market. Market makers make money by capturing the difference in the bid and the ask price, known as the bid-ask spread, while carefully managing inventory risk. In the modern electronic markets, this process is largely automated. Algorithms place and adjust orders at high speeds, responding to fluctuations in supply and demand. These algorithms are designed to update prices dynamically, ensuring that the market makers stay competitive while minimizing exposure to sudden price movements. A successful market making strategy relies on speed, precision, and risk control. The algorithm must rapidly analyze the order book, detect patterns in price action, and adjust quotes accordingly. It must also be aware of the order flow dynamics. For example, if large aggressive buyers enter the market, the algorithm might widen its spread or pull back quotes to avoid adverse selection. Risk management is a critical component. A market maker does not want to accumulate too much of an asset, as price fluctuations could turn inventory into a liability. Obviously. So, okay. To mitigate this, firms use statistical models to predict short-term price movements and hedge positions. In highly volatile environments, spreads widen to compensate for increased uncertainty. The competitive nature of market making means that firms invest heavily in low latency infrastructure. Many co-locate their servers near exchange data centers to reduce the time it takes for the orders to reach the market. In some cases, firms even employ reinforcement learning and AI techniques to continuously refine their pricing strategies based on the historical market behavior. However, market making is not without challenges. It requires continuous monitoring to avoid situations where aggressive traders exploit stale quotes, leading to losses. Okay, so in practice, market making algorithms work like this. Suppose it's trading Bitcoin futures. It places a buy order at 50,000 and sells at 50,010 cents. If a trader buys at 50,010, the algorithm immediately adjusts, placing a new sell order slightly higher and a new buy order slightly lower. Continuously adapting to market conditions. When volatility increases, it may widen the spread to 50,000 or 50,050 to account for increased risk. At its core, market making is a delicate balance of providing liquidity, capturing spreads, and managing risks. The firms that do it well combine advanced quantitative models with lightning fast execution. Okay, so give me examples of good and bad outcomes in a market making trading dynamic. What do market makers look for, and what do they absolutely want to avoid? Sorry, so these are all the books. So obviously the big guys have a strong advantage on the retail investor. But simply put, they can just make a lot of money by simply, I'm not saying, by simply like compounding tiny wins. At least this is, I believe. So So, stable markets are what really is good. So, example, a market maker each time they buy at $150 and they sell at 150.05 cents. They make 5 cents per share. Okay. So, what I'm gathering from all of this is that the main challenge is not necessarily um so there's one thing that I didn't understand fully with this guy. So,
You know, I think the thing to know is that the days of the fundamental analyst are coming to an end.
$1 million
And how do we prepare people for that
and that.
sort of shift? And I think that there's a lot of things we can do to help
Okay, so you have to do a
not
pointer to
sort of let
Okay.
Wall Street destroy everyone. You know, the five Wall Street firms, you know, basically, you know, kill every trader and every investor out there. That's not fun. So, you know, how do we fight back? And I'm on the fundamental side. I worked for a Tiger Cub. I didn't, you know, ever want to do machine learning. I never wanted to do market making. But, you know, I followed quant since I was a kid as well, and I was always mystified by how these guys could beat our pants off every year. We worked so hard looking at stocks, and they would just trounce us. And, you know, I think if you can't beat them, join them. but also, you know, I wouldn't mind helping everyone learn how to do it, and then the playing field will be even again. If the playing field's even, you know, that helps everyone. So you have an armamentarium of tools, folks. Quants aren't ripping people off. No, I think quants are making trade-offs. So they're making smart trade-offs, probabilistic trade-offs. You know, and I'm going to show you exactly how this works, and I'm going to even make you that you can link with brokerage APIs to do it yourself. The biggest thing that you have to understand about this is that fundamentally quants really do well. Here's an intraday chart of Pfizer. This is a really good chart for Pfizer, for a quant. You know, basically they're a market maker, so they're sitting on the bid and the ask, and they're willing to offer you merchandise. It's kind of one way to think about it, is inventory and merchandise. You know, imagine you're a retailer and you're stocking, let's say I have this Afrin, and you got 1,000 of these Afrins, right? Now a retailer only sells, but they do have to buy from their supplier, and they have a fixed bid ask, right? They're buying this thing for $2 and selling to you for $3. Well, the market's sort of like that. You know, and to be a market maker, you have to say, I'm willing to buy at, say, 26.40, and I'm willing to sell at 26.42. Now, what's the problem? Well, if you get hit on both sides at once, I think I went through this the other day. If you get hit on both sides at once, 40 times 26.41, you make a cent. It's wonderful. Now, this is a spread that's very tight. You might instead want to do, say, 26.35 and 26.45. Now, the odds are you're going to get hit at the same time on this are pretty low. But let's say you don't need to get hit at it within 1 second. Probability that both of these trades go off in 1 second is not bad. And on 100 shares, you make one single whole dollar. But, you know, on this one, you make $10. You get hit on both sides at once. I think I went through this the other day. Well, the market's kind of one way to think about it, is inventory and merchandise. You know, imagine you're a retailer and you're stocking, let's say I have this Afrin, and you got 1,000 of these Afrins, right? Now a retailer only sells, but they do have to buy from their supplier, and they have a fixed bid ask, right? They're buying this thing for $2 and selling to you for $3. Well, the market's sort of like that. You know, and to be a market maker, you have to say, I'm willing to buy at, say, 26.40, and I'm willing to sell at 26.42. Now, and I'm willing to sell at 26.42. Now, what's the problem? Well, if you get hit on both sides at once, I think I went through this the other day. If you get hit on both sides at once, 40 times 26.41, you make a cent. It's wonderful. Now, this is a spread that's very tight. You might 26.41, you make a cent. It's wonderful. Now, this is a spread that's went through this the other day. If you get hit on both sides at once, 40 times 26.41, you make a cent. It's wonderful. Now, this is a spread that's very tight. You might instead want to do, say, 26.35 and 26.45. Now, the odds are you're going to get hit at the same time on this are pretty low. But let's say you don't need to get hit at it within 1 second. Probability that both of these trades go off in 1 second is not bad. And on 100 shares, you make one single whole dollar. But, you know, on this one, you make $10. Now, $10 doesn't sound too exciting, but it doesn't have to be 100 shares. It could be more. And it could be every stock in the stock market. So if it's an extra, let's make it 1,000 shares, that's $100. And let's say you're doing this on 1,000 stocks, and you're doing that in 5 minutes, and you have enough money for this right now. I mean, that's 1,000 shares is only $26,000. Now, you may not have enough money to do it in 1,000 stocks, but if you do it in 1,000 stocks, that's $100,000 in 5 minutes, and you could stocks. 1,000 shares is only $26,000. Now, let's make it 1,000 shares in the stock market. So if it's an extra, let's make it 1,000 shares, that's $100. And let's say you're doing this on 1,000 stocks, and you're doing that in 5 minutes, and you have enough money for this right now. I mean, that's 1,000 shares is only $26,000. Now, you may not have enough money to do it in 1,000 stocks, but if you do it in 1,000 stocks, that's $100,000 in 5 minutes, and you could linearize that, and you can see in an hour, it's 12 times that, so it's 1.2 million in an hour, and it's about $10 million in a day if you successfully pull this off. Now, I'm not going to give you any illusion that that's necessarily possible, with this amount of capital, but it is possible. It's just a question of how much capital you need. And you will have losses and things like that. So I did talk about this last week. So in essence, as you sell here, where the stock's rising, you are accumulating a short inventory. You might be short $5,000 by the end of this. Now you might also hedge. You might say, I'll buy SPYs to offset. And as it goes up, you may say, I'm going to lighten my load on how much I'm willing to sell. Instead of 100 by 100.
Okay, so I believe the main takeaway that I got from all of the research that I've done in these days is that, well, you need tick data. You can't use open, high, low, close. You can't use candles. If you want to do if you want to do quant trading, you need live data and you need live fucking what's it called? You need live data supplies. So let me just check. So I was using FMP, I believe that's what it's called. FMP. Nope. Let me just see what it's called. Yeah. FMP financial data. Financial modeling prep is what it's called. So stock list, symbol list. So the thing that I hate about this is that how I think that the main thing that I hadn't considered that you may sort of have all of this going on. But so fundamentally what I understood from Shkreli is that he said that you can just make a lot of money by simply betting a lot of money to make a very little percentage. Sorry. Okay, so the point is, you're putting in $26,000 to make like 100. Like the return on investment is very low. It's a 0.3% investment, but the point, like, it's a 0.3, almost 0.4% return. So for every $100 that you put in, you get 38 cents. Not bad. It's not the best reward, but the point is, when it comes to risk, so from what I understand, you need a lot of capital though. But this is quick, and the difficult part about this is not necessarily the strategy. The strategy is pretty simple. The point is you need so much capital to make, like, considering that this is the return on investment, to make considerable amounts of money, you need a lot of capital. And not just that, you also need high risk tolerance, because if things go south, you're losing 26,000, not 100. So maybe you'll have stop losses, I guess. Yeah, for sure. The main issue is you need to have a look at the whole, like, order flow. I was thinking about, so can I see of the Bitcoin blockchain. So I think Bitcoin is a good way to start, just to understand all of these dynamics, because you can just see all of the transactions that go on. And so you can see how the whole Bitcoin moves. So the whole blockchain operates. And from that, you can sort of let's see. And my heart's an open wound, and I hope it heals soon. Blockchain.com, Explorer. So I bought in actually, I think at 86. So we're still up. Not by a lot. Anyway, here's the blockchain. Dope. So we can just look at the blockchain. Value range is crazy. So most of them were okay. From to where it is never sunny, the dark side of the moon. Not many people of this planet understand that I've got some issues and nobody can see. And all of these emotions are pulling on me. I bring them to light for you. So this is all the blocks. Wow, okay. I wish I could see like the first block ever. Where it is never sunny, the dark side of the moon. Wow, what the fuck is this? Wow. Wow. All of this is amazing. I don't know if I want to arbitrage on Bitcoin because I think that I wonder if you can predict the price. So I think that the stock that I chose to predict was sort of a very, very difficult one because it was Palo Alto Networks, which is a very freaking Palo Alto Networks. Where it is never sunny, the dark side of the moon. Precision AI. Yeah, so the point is always that we have higher fees to sort of look at, you know. Anyway. There is never sun in the dark side of the moon. Not many people on this planet understand that I've got some issues that nobody can see. These emotions are pouring out of me. Wow. Okay. Now I look purple. I just found out that you can do this. Crazy. So this is something that you can do like within the whole ecosystem of OBS. I fucking love OBS. It takes away so much time from editing. Editing is beautiful in its own way, but it's extremely time consuming. So, and also like it tends to make you lose sight of what you're doing. So, this is so beautiful. This is so dope. I love this. I look like a like animated character. That's awesome. Wow. I'll change colors every day. I'll change colors every day. So, we were left here with all of these issues, with all of these problems, but now we're gonna try it on another stock, which is Apple stock, which is over here. So I think that this whole thing needs some cleaning. Let me check. I'll just close everything up. This was the first strategy implementation. I think that I'll make a... Actually, I'll do it within here. So, Apple strategy.ipy notebook. So, import pandas. Okay. So one thing that I didn't try yesterday was the hourly predictions. So this is one, this is two. Awesome. So the main issue that we're facing right now is that with the candles, you're extremely limited to oh, there it is. Okay. There's one thing that I need to check on my phone. So, just a second. I bring them to the light for you. Okay, back we are with the camera. So I wanted to look at this. This is something that I was looking at. So this guy has a funny way of doing all of this, which is, well, of these things. So sorry. Okay, awesome. So what I did yesterday was I added a bunch of indicators, but I think that what really needs to be done is you create the indicators, and then you sort of create indicators on top of indicators, which is something that I missed. I simply just added the indicators and thought that that would be enough, but that's not enough. So what we're gonna try to do now is I'm gonna see if this can work. Wow, this eye. Oh, okay, it's just the lighting. Okay, so I'll just make my cam a little. Fuck that shit. Wherein it's never sunny, the dark side of the moon. I think that this like helps a lot with not feeling uncomfortable. Like sometimes if you look at yourself and you're like, that's me, and maybe you may be a little like afraid of not looking your best. But when you're not trying to look your best, well, nobody even like you. I know that nobody really cares. Like everybody's so afraid of themselves in this dynamic. Like that's what. Well, nothing. Anyway, let's just build some strategy on top of this. I think that I'll try. Fuck that. I think that this is gonna be good enough. The soundtrack to my life. Okay, so okay, awesome. Can we verify these? Okay, so most of the times we're gonna Okay, so it simply doesn't close the positions though. Okay. Okay, there's something wrong here. Because how does he close these? I wonder why there's no grok. Maybe because it's too expensive, I don't know. Explain this backtest. I used some indicators to figure out when to buy and sell. So they're part of the data frame. However, I don't know how this back test was performed and how it opens, how it closes the positions it opens. If you think about this, like what would have been the return on so you're a dumbass. If you just did nothing, you would have made all of this money. So you missed out on 12 million. This trading strategy is ass. It's just, this is my point. This this is the big problem with. This is the big problem with all of this. That if you simply buy in and you don't sell and you don't do anything. Anyway, I want to see like exactly the trades that it did. So let's go into this. Let's see what this guy is telling us. So, well, okay, this backtest simulates trading based on predefined buy and sell signals in your data frame. It tracks your capital positions, position, numbers of shares held, and trade history. Then calculates the total returns of your strategy. The data frame likely includes columns like close, signal, date. Okay. You mentioned using indicators to generate these signals, but the backtest itself doesn't care about how these signals were created. It just reacts to them. Yeah, obviously. So initialization, starting amount of money 100,000. Also, at a comparison with the returns of a single buy on the first day and hold. To check what strategy, to check how much better or worse the returns can be from a simple parking the money strategy. Because this is the point. If you just put in all of that money and just okay. Yeah, so the strategy is ass. We did 46 trades. Okay. Yeah, I'll take it. So, initial capital, position 0.
I mean, you can learn things on your own. I mean, there's no doubt about that. But if you never apply them, it's kind of hard to learn things without actually getting your hands dirty. So when it comes to pharma, I have credentials. I led labs, I had 100 people R&D team that worked for me. Alex, I mean, that's the point I'm making, is that even with a perfect quantum computer, I don't know what I would do with it other than solve RSA 4096, claim a little prize there, have a little victory lap for, having the world's most powerful computer. But what's next? What am I actually doing? It'd be fun for 20 minutes. My apes are gone. I got hacked. Apes gone. Send help. Here's a good case of tangible book being very, very, very different from real book. This is AbbVie.
Trimethoprim, we turned it from 3 million to $500 million to $1 billion, and the annual income was 50 to 80 million.
You'd say that's the best investment you've made?
Yeah, I'd say so.
What's the worst investment you've made?
I put about $1 million into a record label and $1 million into an esports team, and both were zeros, but I've made zeros before. I made bigger zeros before, but they've been in pharma, where I know something about the field. Music is perfectly fine business, but it's not something I know anything about. And esports is also maybe not perfectly fine business, but I'm sure you can make it work, but it's not something I know anything about. I just liked esports. Those are just wastes of money. When you start finding yourself investing in restaurants, investing in real estate, and you made all your money doing other stuff, you're basically asking for it. What do you know about this stuff? You spent 10 or 20 years studying pharma to become good at pharma, and you invest in pharma, and you decide to take that money and invest in something else that you spend about 5 minutes. You're not correlating the fact that hard work and that institutional knowledge you've built up is what's making you the money. Trimethoprim, we turned it from 3 million.
I think the thing to know is that the days of the fundamental analyst are...
Nobody should be paying for a course on day trading. There's no way to make 1% a day. 1% a day would make you the greatest trader of all time, by far. Better than Warren Buffett, better than Jim Simons, better than Steve Bowen. There's no such way to do that. Investing is very difficult. The results are uncertain. Some ACE inhibitors cross the blood-brain barrier, some don't. It depends not just on lipophilicity, interestingly. There's topological surface area, there's hydrogen bond donors. There's a lot of little things that come into play. But in general, if you're below 1,000 Daltons and you have lipophilicity of 2 or more, come into play. But in general, if you're below 1,000 Daltons and you have lipophilicity of 2 or more, you're going to get across the brain. But not always, and that's why actually targeted ultrasound has an interesting ability to open up those tight junctions, at least temporarily, before they close again. Yeah, I'll make fun of those guys that sell courses if YouTube will let me. I don't want to get on the wrong side of YouTube. But I'll review those courses. Like, same way that guy Mark, what's his name? That does the tech, Marquez Knowles, what's his name? The guy that does the tech reviews. It's very popular. He's been...
MKHP.
MKHP, he craps on the 1% average a day is not doable. That's insane. Let's look at the numbers here. So if you made 1% a day for the 250 trading days in the year, you make 12 times your money. Now, I'm not saying you can't make 12 times your money. You could make 12 times your money in a year, but you probably are going to be taking some insane risk, like out of the money call options or something like that. Insane risk, like out of the money call options or something like that. Marquez Brownlee. I'm calling him Marquez Knowles, because all black people are the same to me, so just kidding. It's Beyonce. It's probably Beyonce's brother. I don't know. He is pretty popular, though. I haven't actually watched his stuff. If someone wants to be a day trader, where should they mainly start? Probably by stop wanting to be a day trader, but it's funny, there are some people that have like a natural talent for trading. The one thing you have to keep in mind is everyone likes to trade. Trading is fun. It's like, sometimes they call it NASDAQ Nintendo. We're actually going to make a keyboard like the Bloomberg keyboard. We're thinking about it. And what I want to do, the Bloomberg keyboard kind of sucks. One, it's not even mechanical. It's kind of a piece of trash. Two, it's just this like color-coded thing. I'm going to be smashing this over somebody's head for an advertisement for Godel. Is it? Could it be mechanical?
that's the main problem with not writing your own code. That, well, you kind of lose track of what is going on. So it's kind of a mess, I would say. Let's check this out. Run it. And let's see. How successful is this really? So the strategy is so much worse than just buying here. So if you bought here and sold here, you would have made so much more than how reliable is this indicator? Okay, so we're gonna check this. Just to see. What? Okay, so it was better to just This is the problem with all of this. Okay, so let me just. Oops. I bring them to the light for you. It's only right. This seems. Okay. I'd say that this is a good approach. Can we predict max and min future? I guess we can.
ਕੀ ਚਾਹੀਦਾ ਆਪਣੇ ਕੋਲ ਰਾਜਮਾ ਆ ਗੋਭੀ ਆ ਨਾਲ ਅੰਡੇ ਬਣਾ ਅੰਡੇ ਕਮਾਉਂਗੇ ਹੁਣ ਇੱਕ ਤਾਂ 버ਗਰ ਵੀ ਹੈ ਤੁਸੀਂ 버ਗਰ ਬਣਾ ਹੁਣ 버ਗਰ ਖਾ ਲਓ
Burger? OMG.
ਦੱਸੋ ਕੀ ਖਾਣਾ ਜੋ ਖਾਣਾ ਚਾਹੁੰਦੇ ਹੋ ਮਿਲ ਜੂਗਾ
Burger ਦੀ bread ਬਣਾਣੀ ਹੈ।
ਰੋਟੀ ਚ ਖਾਣੀ
ਹਾਂ। And I hope it heals soon. Do we have data over here? Why don't we have data over here? So it's only been used on poor countries to fuck them over. Okay. That's not nice, but because I just prefer this microphone. I don't want to have like a copious weight on my head. Anyway, so the main issue that we have right now is I need to find some good indicators, right? So, and I need to find, so this function is good because it helps figure out how to go about things.
ਆਲੂ ਪਾਲਕ ਨਾਲ ਹੋਲੀ ਠੀਕ ਹੈ ਦੇ ਦੇ ਫੁਲਕੇ ਖਾ ਲਓ ਨਾਲ ਮੀਟ ਖਾਣਾ ਖਾ ਲਿਓ ਨਹੀਂ ਤਾਂ ਰਾਤ ਨੂੰ ਮੀਟ ਖਾ ਲਿਓ ਠੀਕ ਹੈ
Va bene, va bene.
ਤੇਰੇ ਅੰਡੇ ਪਏ ਆ।
मैं नहीं खाना
ਕਿਉਂ
चलो खा लेना
ਆਹੋ ਤੂੰ ਅੰਡੇ ਖਾ ਨਾਲ ਸਬਜ਼ੀ ਨਾਲ ਰੋਟੀ ਖਾ ਲੈ ਵਧੀਆ ਅੰਡੇ ਦੇ ਉਹ ਦਰਵਾਜ਼ਾ ਬੰਦ ਕਰਕੇ ਆਈ ਮੇਰਾ
Oh my god.
ਮੇਰੇ ਕੋਲ ਠੱਕ ਠੱਕ ਵੱਜੀ ਜਾਣਾ
Yeah.
ਚਾਕੂ ਲੱਗ ਗਿਆ
Oh my god.
ਜਿਆਦਾ ਜ਼ੋਰ ਕੇ
I live in a cocoon opposite of Cancun, where it is never sunny, the dark side of the moon. I try to shed a light on a man. Not many people of this planet understand. I've got some issues nobody can see. And none of these emotions are pouring out of me. Bring them to the light for you. Wow. This is so weird. It's crazy. Oh, so it's a gamma thing. Wow. Interesting. Well, it definitely looks more futuristic, I have to say. It looks very weird. It looks very, very weird. Anyway, so I need to figure out how to do this. So it's gonna be a lot of trial and error. This is coffee, by the way. I wonder what it looks like. Let's just zoom in. Oh, it just looks blue. Fine. I was wondering if it would be like something more interesting. Okay. So, you know what I'll do? I'll fucking add myself. Okay. So I missed all of the checkpoints today because I didn't like fucking write them properly. Gotta get your checkpoints. So I think I got lost in this. Just in understanding all of this. I have to say I'm very, very like the whole thing of the returns being so much lower than just sitting out and doing nothing. So fundamentally, what that means is, unless you're picking out like stocks that are growing like crazy, and so unless you're picking out like screening the right stocks, if you're trading on these kind of assets, you're probably better off by simply parking your money in them and waiting it out. There's no incentive to stressing it out. There's no reason to stress it out because, well, you're losing money by stressing out on this. You're not making money. Wow, this is very interesting looking, I would say. I don't know why I started doing this. Wow, very different. I think I'll keep that for some other kind of stuff. Maybe it brings a certain vibe that is less work friendly. So we're trying to work here. So I want to make this function also take weeks or days data as time horizon. So one of the main things that I've not done yet is try this on hourly data, and maybe the hourly thing is more and okay, and
Sono stati kickati da un convento, da un prete nero.
cosa?
Un prete nero ci ha kiccato dal convento.
Ma che cazzo è un convento?
ये पल्ले ऊपर का गड्डी चलावन कौन सा जिथे तू जानती थी उत्थे साड़ा का काला जिहा आ गया निकाल जिहा
Ah, ma pensavo che voi volevate andare al
Che
convento.
bellezza. Tutta te, bevi
ਇਹ ਲੜਨ ਲੱਗ ਪਿਆ
ਨਹੀਂ ਲੜ ਨਹੀਂ ਲੱਪਿਆ ਮੈਂ
ਇਹ ਉਹਦੇ ਨਾਲ ਲੜਨ ਲੱਗ ਪਿਆ ਉਹ ਕਹਿੰਦਾ ਪਰ ਪਿਤਾ ਆਪਣੀ ਬਾਤ ਨਹੀਂ ਕਰ ਸਕਦੇ ਇਹ ਕਿ ਉਹਨੂੰ ਪਤਾ ਕੀ ਕਹਿਣ ਲੱਗ ਪਿਆ voi siete del convento voi dovete aiutare non creare fastidi non dare